In the first part of the program, we evaluate the impact of mining on communities, as well as the operational trends likely to prevail in 2012. Many African countries have been struck by what has become known as the resource curse, with oil or mineral wealth fueling conflict instead of funding development. A report by the Southern Africa Resource Watch has prompted debate on the subject. Dr. Dipros Muchena, Deputy Director of Open Society Institute of Southern Africa, discussed the impact of mining on communities.
Part of the problem is the model of development that has been adopted by Southern African countries, which tends to see natural resource enclaves as centers that are not part of the national economy.
Right.
You know, they exist in their own world, use their own rules. The contract agreements that they go with the states are not known by ordinary people. Environmental assessment impact reports are also not shared by communities.
Right.
That model of development has tended to create a conflict between resource providers and resource beneficiaries. And that is exactly what we are seeing in Mozambique. A case of natural resources, a resource-rich economy, which has become the fastest growing economy in the world, in the region, beginning to show underdevelopment tenets. And I think we need to discuss that.
Whose fault is it? Is it the fault of the governments? Is it the fault of the communities? After all, people say, you know, you get the leaders that you deserve. Is it the fault of the companies that come and exploit the resources?
Well, I don't think that we can engage in a fault-finding exercise.
We have to, if we're going to fix the problem.
Okay, I think it can be an important part of the discussion. But I think a further important issue to look at is that natural resources that are extracted from Southern African countries are infinite. They come to an end. So it's important to use them sustainably. So you exploit them for present generations, but with an eye on future generations.
No, for sure.
So I think we need principles, policies, and legislative instruments that can protect and provide for the generations that are there today and provide also for generations for tomorrow.
Right.
If we do that through national economic planning, then we're able to move away from fault finding to talking about how the beneficiation is taking place.
Okay, you're trying to find a solution. So let's give someone some responsibility. Who should be doing this? Is this the work of the government? Again, I'll go through those other players, or the private sector itself that's coming to exploit, or the communities themselves, or indeed people like yourselves.
It is the work of all those three parties.
Right.
First and foremost, we need a developmental state in these countries. Which is a plan. Do we need to have a developmental state? And we don't have.
Okay.
And a developmental state is a planning organization.
All on its own,
Of course. And I think a developmental state is a planning state that take into account communities, that take into account private sector actors, and into account itself as an actor. That's what we need. The second is we need a purposive private sector, which is accountable to communities in which they extract resources, but also accountable to the state. And then we need communities that are able to initiate dialogue and negotiate with those that are mining in their areas, so that they are shareholders to the benefits that come from the mines.
I want to pick on the private sector that's responsive to the community. Where do you find that kind of private sector? Because the companies that we see operating around the world think about the bottom line. In fact, you know, behind us is our video wall, very beautiful video wall here, where we put up the share prices of companies.
That's correct.
And the guys who invest in those companies, they want a return today. They are not looking for a return next week, next year.
Yeah, you can have a beautiful return on your investment, but also still not exploiting the people that you are extracting resources from. There is nothing that says benefit for shareholders must come at the expense of people in the manner we are seeing in some of these countries. So I think that some of these companies in their home states, they behave very honorably. They don't exploit workers in those countries.
With global economic uncertainty, fluctuating commodity and currency prices, miners will need to pay particular attention to the value chain in their operations. Ibrahim Takolia, leader of the Mining Advisory Service practice at consulting firm Deloitte, discussed mining in uncertain times.
Definitely something that's more prevalent. One of the issues that you have is that, and I'm talking of the South African and African situation, is that you have poverty and unemployment, and a lot of times mines are seen as the solution to the problem.
Right.
Now the problem that you have
should
is...
they not be?
Well, the mines can be part of the solution, but they're not the entire solution.
Okay.
If mines could employ economically all of the people in a community, they would. the issue that you have is that they only can do so much. Mines increasingly are doing more and more, and they are asked to do more and more, and the expectation of society is that they do more. So if you compare what mining companies do today compared to what they may have done 20 years ago, they do a lot more.
Are they doing more now?
Yes, but they, you know, it's always because the social issues are so complex. You know, it's difficult for a mining company to address all of the issues, and there will be, you do tend to get disgruntled people, or you know, people seeing mines on their doorsteps and saying, you know, these people are making lots of money, where is my share? So those are the issues that tend to come to the fore. But mines also, they have shareholders who want returns, and you know, that's one of the issues that affects mining companies. Yeah.
Now, as I was telling the pros just before you came about the conflict between the communities and the miners, and I was actually showing you talk about returns. We just showing today the JSE closing at a record. Investors are looking for return for the money. But maybe let's begin the discussion then by looking at the broad trends that you are picking up for 2012. Just let's go through the main.
Yeah, we've identified 10 trends in mining, and one of the first one is the cost of doing business. That has gone up significantly. There are lots of cost drivers.
Whose fault is it?
It's not really a fault. It's just
I'm always looking for someone to blame, so we can then get them to fix it.
I would say the fault is, you know, basically there's a lot of demand for commodities which drive up prices. So if you look at a mine, they have power costs. So you could say Eskom, if you're looking at the South African situation. The other big input cost is diesel or oil, and that's, you know, that's also something that's fluctuates, but when the rand depreciates, that cost goes up. And the other is labor, which also tends to increase costs. So those three are the factors that really drive mining costs. But also what's happening, and it's not just a South African situation, it's also something that's happening globally, is that mines are getting deeper and they're getting more complex, and because of that, the very nature of going deeper and the complexity increases the costs. So in terms of those, I think
worse in the South African situation, because we know it's on record. South Africa has the deepest gold mines in the world. 3 kilometers underground. Anglo Gold is still searching for gold under there. Okay, so that's the first point. Let's go to the other 9.
The other trend is the commodity price chaos. So what we're seeing is a lot more chaotic prices or fluctuating prices in you know, if you look at copper's fluctuated from about $7,000 a ton to as high as $11,000 a ton in the last let's say at least 18 to 24 months, and that creates a lot of uncertainty in the market. The same if you look at I wouldn't say gold too much, but you know, gold also has fluctuated. So what happens is commodity price fluctuations are now the norm, and they affect planning, and they also affect economic stability in that they are input costs into all of your consumer goods. And fluctuating prices, you know, create uncertainty.
After the break, more stories making headlines this week.